Nifty Sensex off day's lows. Sun Pharma, Tech M and Apollo Hospitals along with Axis Bank lead. Amid the market rebound, Nifty Pharma has emerged as the top gaining sector. Nifty Bank and Metals continue to trade in the red. Nifty mid-cap and small caps marginally trade in the red but outperform the benchmarks. HDFC Bank remains under the hammer. In the last 2 days, the ADRs have suffered a plunge of over 15%, while HDFC Bank stock has tanked nearly 10%. And more earnings on our radar today. IndusInd Bank, Polycab and Tata Communications are set to come out with their December quarter earnings. Hello and welcome. This is Last Trades. I'm Agam Vakil, and in this show we take you through all the bug deals, block deals and the big volume buzzers through the course of the day. But right at the top, let's start with the markets. Now, we have seen a little bit of recovery from the day's lows as far as the markets are concerned. And while the Bank Nifty did move in the green to a certain extent, it is once again showing a lot of weakness. So, well, there's some amount of weighing down as far as benchmarks are concerned. The Nifty, that has also come off from day's highs as well. Well, we're looking at a little bit of a range-bound session as far as benchmarks go. And it's been a quiet one at that. And there's been a little bit of a push and pull between, well, should I say bulls and bears at the moment. While we did see the Nifty once again make an attempt to move into the green, that really hasn't come through. And the question really is that if not today, then can we see about a short covering perhaps over the course of the next few days? And it is imminent, but when is something that we are yet to have an answer for. But as far as stocks go in terms of constituents, in terms of all the, well, should I say, the stocks which are perhaps pushing the Nifty higher would be something like an L&T, Axis Bank and Reliance Industries. On the other hand, HDFC Bank for yet another day continues to weigh heavily on that particular benchmark. And let's not forget, LTIM has come up with its earnings as well. And we are seeing a sharp knock on that one as well, along with Asian Paints. So keep an eye on a whole host of these counters. Let's take a look at the broader markets too and what's really buzzing there. And we were talking about the broader markets marginally outperforming the benchmarks at the moment. We haven't seen too much traction there, but, well, some gainers are here coming through as well, all the same. And, overall, as far as your broader markets are concerned, we haven't seen that much. But if I just consider the macro cap index, and, there is a lot of price movement there. So we do have something like a watt card, which is up around 5.5%. Keep an eye on JK Tyre. That's up around 5.2% as well. And we have around 4.8% gains for Inox Wind. So these are a handful of counters which are in fact bucking the trend. And, well, it's something that you can keep an eye on, because if they're moving in markets which are weak, well, I'm sure we will continue to see a surge once we see some amount of positive traction in markets overall in general. But from there on, we talk about stocks which will be in focus in today's day of trade. Right at the top, we will be talking about Oracle Financial Services, a tremendous quarter, and it's coming, well, moving from strength to strength, isn't it? Birla Corp, on the other hand, is also in focus. It's given up on days highs, but it's still buzzing on significant volumes. PCBL has been the silent mover in today's day of trade, and not just today, but in general overall. We'll be talking about that, along with LTI Mindtree, disappointing set of earnings coming through. And, well, that's where you're seeing that big knock as far as the price is concerned. We start off with Oracle Financial Services, and it's looking at a substantial up move. We've seen earnings come through as well. But let's get in Mahima to talk to us about what's really gone well for this particular quarter. Mahima.
Right, Agam. So as you rightly mentioned, it's had a tremendous Q3. If we see, the revenue has grown by 26%, EBIT was up 57%, and margins have improved significantly to 46.5% as compared to 37.3% last quarter. Net profit has been up 77.5%, which is a huge jump. If we talk about the key highlights, the license fees have increased by 76% this year as compared to the last fiscal year. 19 customers went live this quarter, which is a good number. Their EPS surprisingly has increased by 25%, which is a good number again. And 50% of the revenue comes from US and Asia Pacific region. Also, their attrition rate has decreased from 15% to 10% as compared to Q3 FY23, which is also a good sign. If we talk about the stock performance, the stock has touched an intraday high of 23.3%. 5 days, the stock has been up 37%. 1 month, the stock has been up around 40%, and in 1 year, the stock has given returns of around 98%. Also, there has been one large trade that has taken place where approximately 54,000 shares have been exchanged at the price of 6103.4, and the shares are at present also trading very high in volumes, 20 times its 20-day average. So overall, the extremely good result is what literally taken the stock up.
Well, absolutely, Mahima. There are no two ways about the kind of traction that we are seeing, not only just the price, but also volumes action. Mahima, thank you so much for getting us that update as far as Oracle Financial Services is concerned. But from there on, we move on to Birla Corp. That's the other stock that we have on our radar. This is, of course, the cement company. And look at its intraday movement. Earlier on the day, it started off with a bang. Ever since then, it has given up a substantial amount of its intraday gains. But that's not to speak, not to say that it's been lacking in terms of volumes, because in fact it's the other way around. Well, let's get an update on this one as well, and perhaps we could get a little bit of flavor with respect to what's happening with the cement sector as well. Let's get in Mihika to talk to us about that. Mihika?
Yes. So yeah, the stock has pared gains, but it went to an intraday high of 9%, and the stock is up 46% over the past year. Volumes were over 15.5 times its 30-day average, and the total volumes did stand at 13.6 lakhs. Now, in terms of Q3 expectations, Bloomberg estimate a revenue growth of 15% year on year, EBITDA growth to double, and margins to also expand from 7.2% to 14.8%. And the company is also expected to post a net profit versus a net loss a year ago. Now, what's working for the cement space and the company itself is the pan-India cement price hikes, which will help realizations. On a quarter-on-quarter basis, pan-India prices are up 3%. Furthermore, moderate demand is also expected to help volumes. And one of the key factors is the lower fuel cost, which is going to help get better EBITDA per ton. Now, the power and fuel expenses, account for 30% on average total expenses for cement companies. And both domestic and international petroleum coke and coal prices have fallen 30 to 40% year on year. And lastly is their Mukatban plant, which is expected to ramp up. Now, Centrum Broking states that the ramp up will help the company, and the company's current strategy to focus more on the premium products augurs well for the company. And as the realization, which was at 40% as of September, as it grows, the profitability by the plant would also help the company.
Okay, Mika, thanks so much for getting us that insight as far as Birla Corp and the cement sector is concerned. But we talk about a stock which has been a tremendous mover, and another 11% added in today's day of trade as well. That's Philips Carbon Black, PCBL to be a little more precise, and it's buzzing on volumes. But I'm going to say no more because I know that my colleague Varsha has a lot to tell us about this one. Varsha, good afternoon. What do you have for us?
Good afternoon, Agam. So as you rightly said, so company is trading at over 12% in trade today. Now, if you see, let us have a background on this company. So what company does is it's into business of production of carbon black, which is slowly increasing its contribution from performance chemicals and specialty chemicals. Now, what's working in favor is there has been improvement in the product mix for the company. And so if you see, the share of performance chemicals is up 21% in Q3 FY23 versus in Q3 Q3 FY23 versus 27% in Q3 FY24. Also, the share of specialty chemicals is up from 9% to 11% over the same period. So good improvement in product mix. Also, if you see the improved product mix has lifted their margins from 12% in Q3 FY23 to 17% in this quarter. So 2 days back, a company had results. So let's see how the results were. So revenue was up almost 21%. EBITDA was up 70% as margins were 17% versus 11%. And if you see what are the factors contributing this success is higher export share, which is up 50%. So there was this increase in export volume by 50%. Also better product mix within non-specialty segments. And there's been strong ramp up of new capacities in Tamil Nadu, which has achieved 50% of capacity utilization. Now, company anticipates reaching optimum utilization over the next 2 quarters. Also, the cherry on the cake is the company has recently acquired have done 2 acquisitions, one of being Aqua Pharma Chemicals. Now, this is a very important step as company's journey towards getting away from pure commodity carbon black to specialty chemicals. Then JV with Kinaltech, which is for expansion in battery application market. And these acquisitions will be financed through a mix of internal accruals and debt.
Okay, so to summarize what Varsha has just told us about Philips Carbon Black or PCBL in this case is that one, they're looking at an improvement in their product mix. They've had a very, very strong quarter coming through in which not only do they have very strong revenue growth, but also a significant expansion in their EBITDA margins. Moreover, when it comes to other factors, they are looking at higher export shares among many other things. And of course, they're looking at a ramp up as far as production goes. And to aid that, they also have an acquisition which actually not only aids them in their business, but also diversifies and de-risks their business. So these are the several factors that are working in favor of PCBL. But Varsha, if you could tell us, while we have seen the strong up move, I'm sure there are also certain risks associated with the stock.
Yes, so Agam, so this company is into B2B business. So one of the risks is what if their clients start up with backward integration. So, for example, Balkrishna Industries started its backward integration into carbon black. So, backward integration by their clients is one of the risks that this company may face. The other is there is an alternative substitute to carbon black, which is silica. So, increased use of silica in tires will actually pose risk for this company. And also the third risk being increase in crude price will actually impact the margins for this company. So if you see in December 2020 when the crude price was down, the margins were almost 20 to 25%. But later on we saw the margins decrease. So volatility in margins which we may see due to crude price impact. So these are the risks that this company may face.
Sure. Well, Varsha, thank you so much for getting us so many details on this one silent mover that we have been tracking through the course of the last 12 odd months. We'll continue to keep an eye on that one. And from there on, we talk about a Nifty company which has been under pressure in today's state of trade. And I'm talking about LTIMindtree. Now, we've seen volumes surge, and these are significant volumes to say the least because, we have seen a little bit of a disappointment when it comes to the way things are turning out for LTIMindtree. Now, while we have seen a significant change, when it comes to its operating metrics, it's not really translated in terms of its quarterly earnings. Remember, we are working with an already, weak quarter. But that said, while that expectation of quarter was there, we're looking at a contraction in EBITDA margins, EBIT margins in this case, and that's the reason why we've seen the company take a huge knock. There were a lot of expectations with respect to growth when it comes to LTIMindtree. Now, while the company does suggest that they have the highest ever order inflows to the tune of nearly $1.5 billion, and their headcount has also dipped to a certain extent, and sequentially by about 1,000 odd mark. And their attrition rate stands at around 12%. That's not too much to speak for. The question really is that until a session ago, the valuations at which LTIMindtree was trading at was factoring in substantially higher growth as compared to what the quarter results are, and the consequential impact on your annual numbers. Of course, we will have an update on the guidance for the upcoming year in the final quarter of this financial year. But if we do see even a bit of a miss when it comes to the top line and the margins, that's where you see, well, companies which are so fully factored in when the positives takes the kind of knock that we are seeing as far as LTIMindtree is concerned today. Now, we're going to keep an eye on the several tracking meters, and even at this rate, LTIMindtree potentially is the favored company among the top 5 based on market capitalization. That is, of course, when you consider something like an Infosys, TCS, HCL Technologies, and Wipro. But once again, today's knock will have shaved off a good amount of its market capitalization. And the question at the moment stands that if it is looking at a 10% correction, is there more in store? And at around well over 6,000 rupees per share, was it really priced to perfection, which is why we are looking at that amount of weakness seeping in? We continue to keep an eye on a whole host of these factors as far as LTIMindtree is concerned. But on that note, we slip into a short break. But before that, we also spoke to the CEO of LTIMindtree, and that is Devashish Chatterjee. And this is what he had to say about the company's margins. Listen in.
We have very clearly called out that, for FY 24, we are not going to, we are that 17 to 18% range does not hold good. So we are going to, but at the same time, the plan remains intact, but we are just deferring it by a few quarters. But when you talk about the EBIT bridge, just to clarify, we lost almost 200 basis points because of furloughs, fewer working days, and quite a bit of seasonal pass-throughs that we have in our business in Q3. But we recovered 80 basis points from our SG&A efficiency, as well as 60 basis points from our other operating efficiencies. So we lost 200, got back 140. That's why you see a decline of 60 in terms of our EBIT.
Welcome back. And we take stock of Happiest Minds now. That's Happiest Minds Technologies, which has reported its third quarter earnings, where revenue for the quarter inched up around 11.7%. And, well, my colleague Tushar spoke to the MD and CFO of the company, along with the Executive Vice Chairman and CEO of Product Engineering Services. And this is what they had to say. Listen in.
Given the typically shorter than usual quarter, we have managed to grow about 0.8% in rupee terms and in constant currency. 9 month over 9 month, it's a 11.5% growth, which is very close to the 12% guidance that we have given to the market. So the focus of what this year and now is to make sure that we are close to the 12% guidance for the year. On the profitability front, they're all growth numbers, growing over both sequentially and substantially over year over year. So, the underlying financials are looking good, but we lost, I would say, about 1.7 or $2 million because of the shorter quarter. 60 working days is what we had, and coupled with year-end holidays by people, furloughs, we had to take in that kind of a number. With about 75% of our business coming from T&M projects, the impact tends to be higher for us. But despite that, we have this performance, and now we're looking for how to close the year in Q4 and then try to make the most of the turnaround that we are seeing in the market.
Also, just wanted to know regarding your margins, are any more margin levers left for shoring up the margins here on in Q4 and FY25?
Absolutely. Our utilization has perked up by 1% to 75.6%. So that's a big lever that we have, because whole of last year we were at about close to 80%. And we always used to caution saying that 79 is kind of a nice number to have. Right now we are at about 75.6 thanks to the addition of people in terms of the campus joiners that we've had. We've added about 350 plus during the year, and they are slowly getting into billing positions. It's important to have that pyramid straight. So obviously the campus joiners, while they in the early period have an impact on the utilization, turn to getting built out over a period of time, and the cost benefit tends to help margins move up. So we have the lever, we have those levers. The other thing is when you have a perk up in revenue numbers, that's also going to be another lever for us, revenue growth, because there is an element of fixed and variable costs, and the fixed costs are all defrayed. So to that extent, the variability is at a very low percentage in the IT industry. So we will see scale also happen.
Sorry. Right. Well, moving on, we talk about what's happening in Davos, where my colleague Neeraj Shah spoke to the Vice Chairman and Managing Director of Apollo Tyres at the World Economic Forum at Davos about his perspective on India's growth and how there are people keen on making investments in India. Listen in.
Well, it's been pretty neutral, I would say. But yeah, India is on the growth path, as we all know. 6.5 to 7% is our growth GDP. So India is booming, as we can see on the promenade. All states are well represented, and there is a lot of inflow of funds coming into India. I can see that. There's a lot of excitement about India because other world economies are going through recessions, inflationary issues, geopolitical issues, whereas I think the government under the Prime Minister is being very proactive and have taken very good, positive, proactive steps for the Indian consumers, for the India infrastructure, which is now playing out. And we are seeing that on the road also.
Okay. So not just as the head honcho of Apollo Tyres, but as somebody who's a part of various bodies in India and Davos, what have been conversations like? Are people keen to make investments into India or other economies at a point of time when the world growth seems to be tapering off?
Well, I think it's a bit cautious. People are waiting and watching. One of the big themes that's going on around here is AI, and you would have also seen that. And a lot of artificial intelligence, machine learning, what is generative artificial intelligence, how that is going to help your businesses, how that is also going to help governments and economies to scale up. A lot of data centers coming around. So that's, I guess, the new buzz that's going around in Davos this year.
Yeah, of course, for a tire company, not necessarily everything around it, but adapting to that will also be important. But also, just tell us about how do you envisage 2024 to be?
Well, particularly in AI, we've been doing this for the past 3 years now.
Okay.
So we have 2 tech innovation hubs, one in Hyderabad and one in London, where there are data scientists sitting. We are now on the cloud, so all our data is real time. We have 7 plants across India and Europe. So all data is coming from the cloud. Data scientists are analyzing it through artificial intelligence, understanding equipment. So for example, in our plant in Hungary, we've been able to increase our productivity by nearly 12%, just through data mining, understanding data, and by increasing productivity. So very less inflow of CapEx, which is what we are doing for the next 2 years. We're going CapEx light, and we are putting a lot of emphasis on digitalization and trying to see how we can improve our balance sheet ratios. Our ROCE is now gone up to 15 to 16% from a sub 10. That's all thanks to all the digital activities that we're doing. And more we'll keep on investing in this. So right now it's only gone into manufacturing. The next step is to take it into supply chain, take it into sales and marketing, and understand consumer behavior through artificial intelligence.
And with that, it's a wrap in this edition of Large Trades. On the other side, we get you India markets close. Stay tuned in.
welcome to India Market Close, and it's a third straight day of weakness on D Street. The markets continue to see selling pressure as we head into the last hour of trade. Well, we're off the day's low point, which was 21,285. We are pretty much at the same point as we were when we started trade at 9 a.m. this morning. 144 points off on the Nifty 50. The Sensex as well trades with a similar cut. So no major relief has come in through the most part of the trading day. Intraday lows were made. We have recovered from that, trading pretty much 50 to 60 points away from the intraday high that the markets had made. Bank Nifty is a weak spot and is probably single-handedly pulling the Nifty lower. There are three stocks that are responsible for today's fall. We'll take you through that in a minute, but Bank Nifty down 500 odd points. 45,560 is what Bank Nifty trades at. Broader markets were actually doing better than the benchmark in the first half of trade, but that equation has now changed slightly, with the broader markets performing or declining in line with the benchmark itself. In fact, just to put this in perspective, the mid-cap and the small-cap index actually opened positive in the first few ticks of trade this morning, but very quickly have declined to trade in line with the benchmark itself. Well, the small-cap still not looking as bad as the mid-cap and the Nifty pretty much trading in line with each other. Well, the breadth of the market has definitely improved from the get-go this morning. It still doesn't look very good, but you have seen some amount of stocks advancing, which weren't really doing so in the first half of trade. The declining numbers still outpacing advances by almost double. Well, those are the top gainers and losers in trade. Like I said, 3 to 4 counters that have single-handedly led the index lower today. It's LTI Mindtree. The counter is getting trashed on back of numbers that some believe are below street expectations. Margins expansion was not seen. Guidance has been pushed forward. No clarity in terms of when there could be recovery and uptick for the company is what's pulling the stock lower. 11% cut on LTI Mindtree is what we have. NTPC seeing a cut of 4%. HDFC Bank, after a nearly 9% fall yesterday, continues to trade the cut of over 3.5%, dip below 1,500, and is trading around those levels even as we speak. Power Grid down 2.5%. Asian Paints numbers weren't too bad, but the street doesn't seem very overjoyed by that. The stock corrected yesterday in the last few minutes of trade, continues to do so today as well. 2.5% off on Asian Paints is what we have. On the gaining side, Sun Pharma on back of soon to be completed acquisition of Taro. The stock is getting a thumbs up. It's revenue accretive. Remember, with a 100% owned subsidiary or company of Sun Pharma, the counter trades 2.5% higher. Cipla is not doing too badly. I guess LTI Mindtree's loss seems to be Tech Mahindra's gain, 2% higher this afternoon. M&M, Tata Motors, Auto is not looking too bad. L&T on an order win. Some of your banks which were getting sold off yesterday on back of a contagion effect of HDFC, such as Axis Bank and ICICI Bank, have probably found their feet in afternoon trade. All in all, it's a down day. No surprises there, Harsh, but we aren't doing as badly as the intraday low, and I do feel like the likes of HDFC Bank will soon find their feet, and we should settle at these levels, if not recover.
Absolutely, Samina. So, few stocks which are buzzing in trade today. You've pointed out a few, especially on the benchmark. But let's take it to the broader market quickly. We have Shakti Pumps in focus, QIP coming in there, 200 odd crore. You also have the likes of a Tata Motors among the frontliners. We have a positive note coming in from BOFA, which has helped the stock gain around 1% or thereabouts. Ajmera and Keystone, both those counters in focus on the back of a tie-up that they've had with regard to development of a project worth 760 odd crores. Both companies will be holding a 50% stake. You can see that spike in Ajmera on the back of that. Max Health around 0.5% of the total market cap has exchanged hands, and therefore you're seeing that 3% down on the stock. You're seeing Ashok Leyland order win, 520 crores in consideration, and you're seeing that stock a buzz as well. Aarti Industries, 6,000 crore new order win coming through, 4-year supply contract, 1,500 crore per year. Starting FY25, we spoke with the management. That stock is up and away as well, 4.5+%. NHPC in focus because government is selling stake. Expected to Precall Minda also in focus. Minda has sold 15.5% in Precall at 343. You're seeing even Precall largely in focus, and that one's the real beneficiary. Sun Pharma, Samina spoke about. We also have within the earnings pack several stocks in focus, Oracle Finance, the two big ones. Of course, HDFC Bank and LTIMindtree still continue to be in focus. ICICI Pru is down on the back of results. Alok Industries, Happiest Minds, as well as South Indian Bank. If we can quickly have those, you'll see the reaction there as well. Positive on South Indian Bank on the back of a strong PAT growth coming in, and Happiest Minds down 4.5%. Those are all of the stocks in focus, Amina.
I mean, it's insane, right? You get stocks like Oracle that actually gain with the kind of gains that we've seen. Unprecedented moves is often what some of these stocks have been seeing in the last couple of weeks, or at least in this part of the rally. Oracle, like Harsh maintained, has impressed the street so much so that the stock trades with a gain of 28%. Soba, I want to quickly mention, I'm not sure if you mentioned that, the stock is up 14%, so very sharp rally playing out there. Web Global, now this is an interesting counter. It's been a huge underperformer in the last few years. We actually had caught up with one of the marquee and investors in Web Global, which is Sumit of Malabar Investments, and he was talking about how the company's prospects are looking great. They've also raised some funds for massive expansion plans this year, and that could be keeping the stock together, up 7% in trade. Apollo Tyres is up 6.5%. So auto ancillary is actually looking pretty good today. Castrol India also trading with a little bit of a gain. SIAT, tire companies in particular, are having a pretty pleasant day. Well, apart from LTIMindtree, Alok has got a thumbs down in numbers, so the stock is down 6.5%. Coforge is seeing some weakness. You've also got Capri Global. Now, remember, Capri Global as well has been a big gainer in the last few days. There was fundraising there. The company we caught up with yesterday seems very optimistic and bullish about the outlook. What you're seeing this afternoon is pure and simple profit taking. So that's literally the texture of the market, stock-specific action, but you've got some stocks that are leading the losses on back of earnings largely. Well, a quick mention of Europe, if I can get that on the screen before we go over to Gaurav Bisa and get a sense of the markets from him as well. Europe, remember, is seeing a flat start from what I last checked. There you go. That's exactly how it is. CAC is looking okay, but the DAX and the FTSE are trading flat. They, remember, was at a pretty rough day in trade yesterday. So those markets, as they open up, are trying to find some sort of sanity this afternoon. But Gaurav Bisa, Vice President, Incred Equities, now joins in. Gaurav, hi, good morning. Good afternoon. How are you feeling about the markets? We've seen a big fall. I don't know whether a 4% really qualifies as a big fall, especially after the kind of rally and run-up that we've seen in the last couple of months. But what are the thoughts on the Nifty, and what's the strategy on the Nifty at these levels?
Very good afternoon, and thank you for inviting me on the show. Yes, indeed, 4% might not sound that large unless you are a put writer. Having said that, Nifty is now trading near its support area. 21,450, 440 is the immediate support area. It's hinging around those levels. For Bank Nifty, the supports are placed at 45,400 on the spot side. Again, it's slightly above that. So in my opinion, if these levels are sustained, we may see some relief upside. I will not call this as a bottom that from here on we'll have a fresh lifetime high, 20,000. But a bounce back cannot be ruled out. We have seen RSI on the lower time frames, intraday time frames being an extremely oversold zone. So on that perspective, you can see that even though from just almost a flat kind of move in Nifty, we are down 130, 140 points, but we have again tried to recover. And that is because your RSI is still in the oversold zone, and that is trying to make sure that we don't fall too much. So yes, today we might end on a negative note. We might not fall very deep. And tomorrow, if we sustain again about 21,500 and 45,500 for Bank Nifty, we may see some upside of towards the of 21,850 in the coming days. So right now, we are not that bearish. We were a few days back, but right now we are hopeful of a bounce.
Gaurav, we made an intraday low of 21,285. We bounced back from that to levels of 21,480 odd. What sort of a closing are you watching out for in today's day of trade that could probably for the interim, lead to maybe a dead cat bounce of that?
That will be around levels of 21,500 because people who got comfortable writing call options will now again be forced to cover the positions, and we may see some short covering also once Nifty sustains about 21,500 spot level. So for me, that is a good level to watch out for. And if that sustains, we may then the today's low that becomes the trigger point of many of the stop losses of the long position. We may see a decent upside. So we will have a day where we had a panic bottom. We had a very strong bounce, very strong recovery from the panic bottom, and then we are comfortably sustaining above an immediate resistance area of 21,500. So these three factors combined can result in some amount of upside in the Nifty in the coming days.
Got it. Gaurav, Harsh also joining in. Gaurav, if I can have your views on two counters in particular. HDFC Bank, what should one do? How are charts looking? And LTI Mindtree, both of those big ones are beaten in trade.
See, it's very easy to answer for HDFC Bank. As a disclaimer, we have advised our clients to buy HDFC Bank today. We are not suggesting a buy for a trading perspective, but for long-term investors, we have pushed them to buy at least a partial quantity to be bought at the current juncture. Yesterday, the area was pointing towards a 10% cut, and if there were a similar kind of fall that we would have seen today, 8%, 9%, then we would have bought the entire quantity, but it was a 2%, 3% downside. So on that perspective, we are keeping some cash to average it out again once it goes towards 1400. The long-term structure remains extremely positive, and I think this is going to be one of the last falls, another 5-7% from here, and then we can see a very sustained upside. So we may see some underperformance on an immediate basis. It might trade in a range. It might remain sluggish, how it has been doing for the last 1 year. But the intensity of the fall will not be that high going forward.
It's HDFC Bank that we're talking about. Gaurav, even if you, like you said, you've recommended a long trade to your clients and your clients largely. At what is the sort of upside that we are watching out for? So even if we do get a revival or a return or some sort of a recovery coming in, what should be a good take profit level?
So our conservative targets are 1750, 1800, which we are expecting in a year. And from there, we may see a fresh momentum sort of coming in. So on our proprietary models, there have been 4 instances where it has come to extreme levels, and in all the 3 or 4 instances, we have seen a very sharp rise coming in. It makes a fresh lifetime high within months, and it enters into long-term uptrend. That extreme level would have been 1300 if it would have fallen towards those levels. Since it has not approached those levels, we are not very aggressively buying. But what we expect is that at least a lifetime high can be seen this year, and then we may review whether we need to keep booking profits or we need to ride the trend.
Vineet Bulinkar also joins in. Vineet, good afternoon. We spoke a few days ago and a lot has changed since then, it seems like it. The markets are looking a little less nervous than they did this morning, but we're still not being able to, pull through any sort of meaningful recovery on the benchmark. Before we get to the benchmark conversation, just for the sake of continuity, we talked, of course, about HDFC Bank. What are you making of those numbers? Do you feel like the reaction has been a little overdone with the way the stock is corrected? And also being mindful of the fact that none of the brokerages have downgraded the counter despite numbers being a slight disappointment.
So, we have to look at it. We've had 22% top line growth, and, your NIMs have gone from 4.2 to about 3.4. So, you've taken a 14% hit. Effectively, you've grown your top line at about 8%. And, your EPS has turned negative. That is a very negative concern for everybody generally. And unless and until, your NIMs start coming back or you show some kind of traction around deposit mobilization, which will help to boost your NIM, I think things are going to remain in a kind of a suspended motion in terms of HDFC Bank before we can expect any re-rating to happen. So to that extent, I think we last spoke that our top picks are going to be Axis, Kotak and HDFC Bank in that order. And I think, that kind of situation is now playing out. So, when Axis is available at reasonable growth and valuations, with, steady names, not expecting too much of deterioration out there, why venture into stocks where there is growth concerns are happening? So I guess that is my take, and I think Axis provides a better opportunity than HDFC Bank at this point in time.
Point taken, Vineet. Axis over HDFC at this point. But, I'm going to quickly address because we've got Tata Communications numbers which have just come out. You've got revenue which is up roughly 16% sequential. You're also seeing EBITDA which is up roughly 12% sequential. So there's a bit of a margin decline that we are seeing. From 20.8 margins have declined to 20.1, around 70 odd bips of decline that we're seeing. There's an exceptional loss which is also at play in Q3. I have to try and dig in and understand more on that. But outside of that, you're seeing a profit of around 45 crore. And if I remove that exceptional loss, you're seeing a profit of roughly 230 crore. So not bad at all. Sequential uptick when I'm removing that exceptional loss. And you can see that a little bit of a spike on the stock on the back of that. But we'll discuss that and much more. Lots to address, including stock of the day, Samina, which is LTI Mindtree. On the other side, time for a quick breather. You stay tuned to NDTV Profit.